So welcome to another clean-cut hedging video by the Trading Mentor. My name's Will Sebastian. We're going to jump straight into it. Before we do, if you enjoy this, and you can see on every single hedging video I'm posting that we always end every market move, no matter the asset, no matter the time, in full gains overall with a low drawdown structure. Then like, comment, share, subscribe, and go underneath if you're interested in learning a little bit more for free. Let's jump into this one. So we're going to go for another run over. I picked some more recent years again, 4 years back or so from now, just so we can get some more recent data. I think some people probably watch this and wonder, oh, you know what, all these videos in your playlist, yes, you're ending every market move in gains, every swing with low drawdown. But what about more recent years rather than historical ones? Well, the markets haven't really changed, I would say, in terms of their overall moves over at least 20 years. I mean, if you look at this, it's quite consistent, isn't it? I mean, you have a fair drop here, but you can see in the interim, there's always, trending markets. So at least the 20 years, well, I've back tested this for a long time anyway, so I know that it hasn't. But yeah, it's pretty consistent over time. The reason why Forex markets are so good, particularly for hedging, is because they fluctuate, quite a bit. I mean, sometimes you get, you'll catch those fluctuations. Sometimes you'll be on the losing side. It doesn't really matter if you're hedging, however. It doesn't matter whether you're long or short or whatever it is. You don't really care where markets are going long term. And I'll display that now. So I'm going to take something light just to begin with. 0.2 is going to go in. That's going to get us $50. Okay, so now I'm going to take a short, slightly heavier. Okay. And I am going to hedge that very slightly. Okay, so I'm going to take a 0.15 off of that 0.4 overall. And okay, so we're now rallied a bit. I can take my $77. I'm going to look now for a longer term short zone to add another entry. That 0.4 over 80 pips has cost us $217. So because price looks very bullish, I can't see anything really significant that's going to block it. I'll take another light one, and then we're going to add another one there. And if we keep going, which we didn't, I would have added a bit more. But I can take that one off for another $50 or so. Swap to the daily. Do I want to hedge? For the purpose of this video, I will. But normally I probably wouldn't take a long at that point. Okay, but in this case, it's gains. I'm going to take 3 0.1s back at the high. And on an aggressive drop, I will hedge again. And I'll take some gains. Okay, so the market is struggling to fall. So I'm just going to take these off. 1, 2, 3. And I'm going to hedge 0.15 out of my 0.4. And I'm going to add another 0.15 there. And I'm not going to add another long at this point. Just going to see where we end up. Back to the highs up here, and I'll take gains. Otherwise, nearer that short, I'll look to see what I can do with it. Okay, so that's a really decent long zone, to be honest. But I don't want to add too much, really. Okay, so I want to kill that short if I can for gains. There we are. Take that off. Now, I don't want to add anything long unless we get something like that. I'll add a 0.1. I'll add another one. So our exposure is about 0.6 over this drop from about 1095 to 1075, 200 pips or so. So I don't really want to take it unless you get an aggressive push to the upside. The market is struggling, so I'm going to add just a light protective hedge while keeping those longs on, just in case that happens. Take that out. Draw down about $400. I'm going to add again. And I'm just going to take these two off. And I'm going to hedge once, short. I do want to get rid of that long behind there, just to get rid of it. Price still climbing, so I'm going to add 2 more 0.1s. Take those off. And you can see my equity still quite stable. And I'll just take that short out, add another long. Okay, and on a drop lower, I'll consider another long if we can get there. Market's still quite choppy. So I'll just add another couple of shorts in. Again, you could be trading all your assets in your portfolio at this point, and the gains obviously then would be a lot higher. I'm just showing you a risk-averse example now. So I'm just going to take a light long there. Take that off. Light short. Okay. Still not seeing an awful lot. Light long again. Okay. So I'm going to add 2 light longs. Nice drop now. Anything drastically lower and I'll add again. I can add a light short there. Kill that long formally off. Add a light short there. And a light short there. So that's a drift of 106 to 107.4. Okay, add. I think I'll go for another 2. I'm going to be slightly more aggressive, just in case there's a larger drop. If we don't get it, I'm probably going to hold off until this high again, because that's where you've really got key price action, and that will allow me to kill those longs. Obviously, that's if we get there. So I'm going to take that one off. I'm not going to add a long at this point, at least not a considerable long. So at this point, you've got about 0.5 in play, probably a bit more than I'd like, to be honest. Take that short out. That's still in a loss, so I'm not going to take that one. I can now take that one out, add another long. Okay, I would have liked that one. Go add another long there. And I do want to close that short, but I'm not just going to leave it because I can't be bothered to go under here and, all right, I will, fine. So I'm going to make a massive difference, really. Is it that one? No, it's not that one. It's one of the, it's that one. Again, minor gains there. Save, and we're out. So now we can look at how to more or less hedge out of these longs if we need to, or at least protect ourselves drawdown wise while the market's going against us. So good, a couple of hedge gains there and there. I'm not going to add anything long until we get much, much lower because there's no real considerable price action. Then I'm going to add 2 there. And I'm not going to take them away unless we get a significant push. If we keep going down, I'm going to add again, which we look like we might. Okay, great. I'm going to add 1, 2, 3. And at this point, I probably don't want to add anything more. And I'm just going to show you more or less how you would then scale short and look to hedge. So take that one off. Great. That one off. Fantastic. Okay. So several longs taken there. And if we dip here, I can take gains like that. Okay, so there's hedge 1. I could take slightly less long exposure than I did a minute ago. I can take those off. And that one. And now I can just add another short just in case we keep going down. So I'll take that off. And at that point, really, I can look to start to work out of the former ones I've got wrong, just in case we keep going to the south side. Now you can see my drawdown is still quite low, so I really, I've got absolutely no worry anyway. I could probably leave these on forever and I'd still be okay. But the point of this really is to hedge out. So at this point, my drawdown is picking up a bit and I'm taking a risk-averse approach here. So I'm not going to add any more longs. I'm spent now. We've gone 1095 to 1035 roughly. Okay, so long way, but this is a very risk-averse example because the drawdown is tiny. But if you're looking to keep risk really low, which a lot of people are, this is the way to do it. You simply just can't take any high sizes. I will add one more because we took a few hedge gains, but I am not long anymore now. And at this point, I can just look and see what I can do to basically get out of the drawdown I've got. So this is going to be a good example for that. I'm just going to add a 0.1 there. I'm going to remove that one, that former long, if I can. No, it's being awkward. Okay, so it's going to be the least one. No, page 2. How helpful. Okay, so it's going to be that one. And because I want to tighten up my exposure, actually, no, I'm not going to tighten up my drawdown just yet because I don't think I need to. So these are going to be minor gains. If it does fall, it's not falling yet. I'm going to add a couple of shorts there in case we've not got it. So I can close that. And now I look a lot more steady drawdown wise. I can start to just keep scaling in short and hedging those longs. And now I've made a bit from my longs, my hedges, I can consider what I want to remove from the pile of drawdown here. Okay, so I can remove that one. Okay, like that. And I can add another short. So I've got rid of my worst offender and I've added another short in case. I can now add another long. Now we're trending a bit. I can kill those trades off. Okay, take a couple off there. I can remove, I'm not going to remove my most local short at this point, and I'm actually going to add a couple more shorts now. And you can see what we're basically doing is flipping over from having longs to shorts. But this time our shorts are a lot more spread out. So we're in a better position really. And I can add more longs anyway. So I can kill that one off. And I can actually just remove that one. Okay. And I can add 2 more longs. And I can now remove that. And I can add again. So my drawdown is less than it was before. And I've removed the short. So if we can flick up to the upside, we'll start to look a lot better in terms of positioning and essentially hedging out of this overall market move. We've finished our short cycle. We're now entering new shorts. Take that one off and minor gains, remove that long. And now I could take a couple down here. Okay, so we'll keep playing. And really at this point, again, we're just looking for, we're looking to exit this drop essentially for no loss, basically. That's more or less what we're trying to do here. Okay, so we'll see if we can do that. So I can now afford a heavier size. And I can take that one off. So 3 times there. And I can add 0.1. I can add another 0.1. I don't want to be too heavy on the shorts because I'm looking to remove those longs if I can. Take that one off, add a long. And eventually we'll be able to just remove everything. So really with the gains I'm now taking, I can aim to remove perhaps the oldest longs just to get them out of the way. So I'm using the gains I've taken to remove them. Okay, so I'll just keep accumulating gains via hedges and normal entries, DCA longs in other words. Another push up, I can kill that one. Add another short, play it through. Okay, kill that long there, kill that short. And if we can get a bit higher, I might consider just removing a more historical long that's out of the money. And essentially what we're going to end up having done is not be any amount down, even though we've been subject to a lot of harsh swings against us. So I'll take that one out. Okay, and now I'm going to take 2 shorts. And I'll just close that. I don't want to add any longs, particularly. And I'm looking for a burst to the upside if we can get it, just to remove some of that long exposure. And I've worked out the ones I've got terribly wrong. Okay, and this again, like I said, is a worked example. I'll take that one away. And you can see what's happening is I'm getting to the point where even though I was completely wrong on the whole of this direction initially, I've managed to hedge out of everything I was wrong on, more or less, and end up overall in a positive position. Okay, So you can now see my equity is positive. I can actually look at whether I want to keep this last long on or not. Okay, price looks fairly decent for a short again, so I'm going to add a couple of shorts there. And if we can work the market down, now we can look to remove these shorts. So I've taken some short gains there. I'm going to remove that one. I'm going to take some there. And the goal here is just to exit everything for gains. Like I said, if we can, just get out of all these trades. And you can see it's a really good demonstration, this video, although it has been very risk averse. Okay, with tiny sizes, I'm just showing more or less how it doesn't matter really what happens. I can remove that one out. So it doesn't matter where we go, what we do. I'm always going to be at least in positive, or if I'm wrong, I'm not losing any money. And then, of course, you would get back to winning ways, and you would just be trading normally after that. I mean, it's absolutely not essential for me to close these trades out by any means, because the drawdown's never been more than sort of 2% or anything like that. So clearly not very dangerous at all. But for the sake of this video, my goal is more or less, like I said, just to exit everything and be completely out overall. Okay, so let's have a look where we get here. Basically, what I'm looking for is a bigger dip now to kill off the shorts. Now I've hedged out of all the longs successfully. You know, I can still add the odd long here just in case. Okay, so I can take that one off. And because my short exposure is bigger than that long, I'm able to basically take more in gains than I'm losing on there. So I'm going to take that off as well. And now if we can just trend down slightly, I should be able to just exit everything completely like this. Okay, so I can add another long. And now we're really coming down. I can add a short. So I can get rid of that long behind this. It's annoying how they stack. I wish they'd just stick ahead. So that was my one long here. Okay, and someone asked me again in another video comment, you know, okay, well, what if the market goes against you continually, or whatever way you want to play it? And this is your answer. You take those gains, you hedge where you can, and then ultimately you remove it all, and then you just work the other side. So the point of this really is just to show that it absolutely does not matter what happens at any time as long as you're accurate and your size is sensible. Now I can add 0.4. Okay, for a nice big drop there, $170. I can remove that one. I can add 0.2. Okay, now we're just getting a lot more reasonable. You can kill that off, add a short, and if this drops, as it might or might not, okay, if it doesn't, I'll add another two 0.2s. I just want to now get rid of those former shorts. So kill that one off and light long. Some reason that didn't close. Oh, it's probably because I took two of them, I think. I mean, even now I could kill it off and still be in net gains. Going to add two of those. So the market is basically now trending long against us continually. So we can wait a bit, wait a bit, wait a bit. Okay, so smack straight down. Couple of longs. Take those off. So accumulated enough probably to get rid of that former short in a minute. Add another short. Add 1, 2, 3. So now the cycle might be extended because we're going to have to wait probably. So at this point, we're just trying to exit the whole thing. Okay, nice drop. So again, I can use the gains there. And now if we can just fall a bit more, At some point we probably will, because the market's gone so high up to the upside. Looking for a larger fall. Okay, so there's a bit. Take that. Take that. Remove this one. Again, using DCA and hedge gains there. Take that one off. And again, still, even if I wanted to, I could close it all. The reason why I haven't closed it all just to finish the whole thing and just get back to normal is because I'm trying to show you, more or less where it is optimum to close out. Okay, which is going to be where there's a median really between the longs you've got wrong and the shorts you've got wrong. That's really the kill zone that you want. But I think I've accumulated enough now. So you can see, I mean, the market trended against me down and my longs lost value. Okay. And the market is now trended up and my shorts lost value. So to that question, what do you do when the market trends? Well, this has gone completely up. If you used a short with a stop, you would have lost money. That was completely down. So it's a great example to show how no matter what happens, how wrong you are on any asset, you should never have an issue. Okay? Because you can always hedge, and therefore you just can't lose money as long as you're doing things right. And that video is absolutely testament to that, because that is an extreme swing. It's rare you're going to get any more than that and the equivalent across other pairs. So just bear in mind, if you watch that, yes, the sizes are small, the gains are small, but if you replicate that across your portfolio, you've got a 2% drawdown on that asset. I think the max was 2 or 3%. It's absolutely minimal. So you could have put the sizes up, you could have had more assets, you could have exited the cycle early, you could have done all sorts of things to help yourself. But the win rate, again, massive, loads of entries, fine. And you get this jagged trajectory because these points are where the market swings against you. But overall, you're still up. Thanks for watching. See you in the next one.